We've got Joseph Minarik, Committee for Economic Development of the Conference Board, Senior Vice President and Director of Research. And Joe, it's always good to talk to you. The Fed chair has been getting some heat since in that congressional testimony, he essentially said publicly that he no longer believed that inflation was transitory. What should we expect in this meeting in terms of the shift in policy from the Fed?
I think the consensus is where Emily was a moment ago, that they are going to accelerate the taper of their purchases of private assets and probably hint at the likelihood that they will begin to raise the federal funds rate, the typical Federal Reserve policy rate, earlier on than had been anticipated in the past. So we will see a more hawkish Fed on prices, and that's, I think, pretty much baked in the cake at this point.
Yeah, Joseph, Zach here. Good to be chatting with you again. I mean, when we look at maybe how the bond market is looking to hikes in 2022, looks like 3 are priced in right now. And you think about what's causing maybe the hawkish tilt is inflation staying high beyond what the transitory take was earlier. And you got 2 camps there. A lot of people may be focusing in on the supply issues and what's really been going on versus some who have, pointed to larger fiscal spending. I mean, if you think Chair Powell's timeline is right, mid-2022, when we might start to see some of the COVID issues roll off, I mean, how does that maybe impact the expectations that are clearly rising for interest rate hikes next year?
You're absolutely right. I mean, the issue for the Fed is inflation. The issue for inflation, as far as I am concerned, is really the pandemic. And, we discovered the vaccine a year ago. Everybody was looking forward to putting the pandemic down. For various reasons, we haven't gotten there. And the pandemic continues to mess up our economy in a number of respects. It has slowed or broken supply chains. It has induced workers to leave the workforce, in some instances with older workers, probably permanently. And therefore, it has tightened up the markets for goods. It has tightened up the market for labor. It has raised the cost of doing business for service businesses beyond labor because of the precautions that they have to take because of the pandemic. So it's been a kind of a perfect storm in terms of inflation. And then, of course, as you erode people's prior expectations that prices were going to be stable essentially forever, that makes it more expensive and raises the possibility of greater inflation going forward. The financial markets are reacting to that, I think, fairly predictably.
You just highlighted some of these cost pressures that you think are going to be more persistent, but there's also the element of things that we have seen play out as a result of the pandemic. You've kind of pointed that out there. We've heard more recently from the White House about some of the supply demand snags, especially over with the ports. That's starting to improve. We've heard from some business leaders pointing to that as well. How much of what we're seeing right now, or what elements of what we're seeing right now, are more temporary and likely to ease up in the months ahead?
I think for economists and for financial market experts looking at current developments, you're probably seeing a great deal of optimism in terms of inflation eventually going away. The markets are, for goods and even for services, are intensely competitive on a global basis. Technology has been advancing rapidly, and if anything, technology advancements have probably been accelerated in the pandemic because of the pressure for communications, virtual meetings, and so forth. If we ever could get this pandemic behind us, a lot of, not all of, but a lot of the pressure on prices currently would, I believe, go away. And as a result of that, we would get down to lower rates of inflation and people's expectations would be brought down as well. It's just a question of getting there. And there is this frustrating failure to do the things that we need to do and that we know we can do to help to get the pandemic put down finally.
And to what extent do you think some of those price pressures you're talking about can, in fact, be alleviated with a slowdown in those or tapering in the asset buying? We're not talking about rate hikes until what looks like, Q2 next year potentially. But, with so much criticism on the Fed and potentially Jay Powell being behind the ball, how much of this do you think can actually be eased up as a result of tapering?
Many economists will probably tell you, looking back all the way to the oil price shocks in the early 1970s, that macroeconomic constraint to deal with supply problems is an inefficient tool for slowing the resulting inflation. Sure, if you reduce demand in markets, as a result of that, you will have somewhat less upward pressure on prices, but you will be paying a higher price in terms of reductions of output and employment than you would be if you were dealing with a conventional kind of excess demand inflation. So the Fed, I believe, has a sense that it needs to act to provide greater confidence that it is on the case, that it is not ignoring the issue of inflation, but it is going to be more costly to deal with inflation that way than if we could find ways to address those market problems and those supply problems. And that's a very hard thing to do. The administration, the Congress are all looking for ways to try to make supply chains work better. Obviously, private firms are working on that as well because it's their money on the line, not to ship their goods and get their sales. But there are a lot of associated issues with that, the tightness in semiconductor markets, the tightness in the market for skilled labor, including drivers for transit rigs and so forth. So it's a tough nut to crack.
And all the more, I guess, pressure put on the Fed here as we approach the last meeting of the year. We'll see how the language maybe changes around all that, too. But Joseph Minarik, Committee for Economic Development of the Conference Board, Senior VP and Director of Research, appreciate you coming back on here to chat with us today.